Alright guys, welcome back. We're on the 3-day chart right here. We got a 3-day suspension block. And very early this morning we had a just before opening bell, I think in pre-session, I'll go over it in a second. We had this sweep of a previous 3-day low, which is a massive pool of liquidity in the 3-day chart. Let's go down to the daily. This all just looks like a bunch of junk. And we got this suspension block right here. Or I guess to here as well, so from here to here, but the 3-day suspension block is more pertinent. So not too much on the daily chart that was at least pertinent to my analysis. 12-hour chart, order block, got that wick right there. This fair value gap right here. And I didn't use this that much. The levels on there. I used, where is this thing from? Maybe 8 hour? Oh, 7 hour. I remember. 7 hour time frame is pretty important. So on here we had this nice fair value gap right here. I marked it out. I didn't really use the fair value gap much at all. Oh, and also the 3-day thing, it disappears when I go on lower time frame because I didn't want to see it there. But this is that previous 3-day low right here. So I'm going to go over to the 15-minute and then go into replay trading. Go back just to before 9:30. Say we swept it right here. This red line is the previous 3-day low. Massive pool of liquidity. So I anticipated at least some of, I don't know how much we wanted to retrace, and I didn't care too much. I know that we had a nice trailed stop hunt right here for sell stops by London high when it swept this out. Swept this out right here. And right in here, super previous 3-day low. I knew that we at the bare minimum, we were probably gonna reach in this fair value gap. That's what I was anticipating. But bare minimum, we hit this line right here. This 50% of these two ranges, because this is such a massive pool of liquidity, it demands a minimum retracement of at least to equilibrium. But I anticipate that we go up into here. So trailed stops right here. We had these trailed stops on the 15-minute chart, and we had nothing really else down here. It's too high time for me to see any noteworthy liquidity. So let's go to the 5-minute. I'm gonna move this back so it's not in the way. Also, it looks like we Judas swung this. This isn't much of a Judas swing. I mean, it technically is, but it's not like the one that I pointed out yesterday. That one was very clean. This one's not so much. But I saw this fair value gap right here. Actually, this BPR, a balanced price range, so two fair value gaps, a SIBI and a BISI right there. This was my target up here, so I just knew we were going to go up, and then we had on the 1-minute, let me point this out. So we're gonna go up. Obvious trailed stops right here. So I'm gonna go back a little bit farther. Obvious trailed stops right here, very clean. This is like one of the pre-session days where I would increase risk. However, because it was still non-farm payroll, or every day for the week of non-farm payroll, which is the first week of every month, Monday, Tuesday I trade like normal, and then Wednesday, Thursday, Friday I make my leverage as little as possible, and I don't look for much in the marketplace. And see if I got bad sleep the night before, and I'm probably not even gonna trade that morning because it's just so. Most mornings for non-farm payroll, there's lackluster opportunities. It's slow. It's not that great, and I don't have too much interest. Price action is also worse, and manual intervention rates are higher. So over here at 8:15. Oh no, we didn't have any non-farm payroll today. That comes out tomorrow and Wednesday, but Thursday is still highly manipulated. So right in here, this is when I finished my analysis. I saw this liquidity pool, and this fair value gap, and saw there was high probability. This fair value gap is high probability because right here we had initial reaction, and there's also a breakaway gap from this bull flag, which actually worked right here. So yeah, lots of stop orders right here. Anyone going long in this bull flag, they were in profit all the way up to here. So buys were making money. This is where their trail stops were. Below this low, below this low, below this low. But I anticipate that we go down to here because it's just, I don't know how to put it into words, articulate it really. It just is so clean right here. This level is just, it's like we're going to take that out. If we don't, I'd be surprised. So I had multiple thought processes here. I thought, well, maybe I could short sub 1 minute time frames, look for shorts on sub 1 minute time frames down to these lows because it's a very easy portion to glean these stops, these buy stops. And that once we reach these, or I could hold off on that, but once we reach these, I could long and catch the buy side of the curve. Buy side of the curve seemed more secure because there's still a chance, that we don't go down to these. We just go down to here or here, most likely here. Use this fair value gap and then push higher. But it just so looks like one of those days. I don't know. Pre-session sometimes is very clean, and this was one of those days. And so, right here we got a Judas swing of this high. I saw it start to reverse, and then I saw this candle right here, and I was like, wow, okay, looks like by this point we're gonna start to go down. So I went on the 1 minute chart to stay here. I was like, all right, maybe we've already gone down a little bit. I wasn't able to catch the the short up in here on the sub 1 minute, so maybe I'm just going to wait to catch the buy side of the curve. And we went down, created this into a fair value gap. Let's go ahead and mark this out. And then look what we got right here. We got an institutional order flow entry drill. Very clean stop losses down here. And a Judas swing of this high. Now that's really indicative that we're going to get, that we're just going to drop down. This is a great signal. So right here at this candle close, I shorted. And I'll show the execution labels in a second here. My stop loss was right here, I think. Take profit was down here. I was a bit worse on this, 1.87, which is pretty bad, but at least the way that, but I was just really confident. And to be honest, I should have had my stop loss right here, or maybe 5 ticks or so above it, this high, because that's how institutional order flow works. And same with immediate rebalances, which would have been a 1 to 3, but yeah. I mean, it didn't matter as much to me because I'm only trading with 1 micro because I'm using the lowest risk possible on non-farm payroll days. I'm not demanding much out of them. But yeah, and then, so I was targeting this fair value gap. Then I went on the 15 second or 5 seconds, something like that, and just watched it. Then, or I guess I'll go ahead and mark it out. Better visual. So that liquidity inside of this fair value, it makes it high probability to be reactionary. So we just go like this, and then take profit as hit at the 9:30 candle. And then my rules state that I can't take more than, I can only catch one side. Either I can choose the manipulation portion, which I did right here, or I can catch the distribution portion, which I was anticipating up to here, or minimum these highs. Well, very, very minimum was this, but it was quite reasonable that we go and sweep these, use it's that black hole name confluence, event horizon. Use event horizon between this high and this 15-minute trailed stop high, and then use that, maybe have a slight retracement, go higher, something like that, to that effect. So in here, I don't really remember where I entered on here. Let's go over top step. I think it might have been the 5 second chart. Looks like I entered right after I got take profit. Okay, so it looks like I entered right here, pretty much within a few seconds after my take profit being hit. I reversed my position and went in for a long. My stop loss was right below here, which is technically incorrect because this is a 5-minute fair value gap, so it should have been down to here, but no way am I doing that. And because it's at 9:30, I anticipate bullishness. And we can also use this fair value gap right here. I don't need to use this 5-minute. So this 1 minute right here is fine. So, and also if we are going to use this fair value gap to go higher, which it has the liquidity inside of it, I'm gonna move it to this. Because this fair value gap has liquidity inside of it, trailed stop liquidity, it becomes high probability that this is what we're going to use to go higher. Therefore, on the 1 minute chart, because it's a 1 minute fair value gap, on the 1 minute chart, if price goes even a tick below this, the low of this candle, that is indicative that we're not going to use this fair value gap to go higher. We're probably going to go sweep something like this out, and then I don't know, I'm just wrong, and I'd probably be done trading at that point because I already took some profit from earlier. So I longed right there with my stop loss right below this, because this is if it mohawks like a wicks outside the fair value gap, mohawking outside of it below this, we're not using this fair value gap. It can't wick outside of there. And take profit was like right here. I should have targeted the high, honestly, but well, maybe not actually, because the way I trade, I just use the nearest liquidity. But it does allow me to get way better RRs if I like target up here, target my overall target. Those are like 1 to 10s. Not this one, obviously, but some of them. And this one right here, I just entered. Now, let's go 1 second. So I want to see what this is what it looks like in real time, I guess. I thought that was kind of cool. Because this is 1 second time frame going at 1 second speed. One candle per second. So this is what I was seeing. I think I might have exited before that retracement. Oops. Yeah, so this is what I was seeing, I guess. And I'm sure I moved or actually it was so quick I didn't move my stop loss. Yeah, I definitely exited before this, I think. I can just check. Yeah, I exited right here. So my take profit was actually at this high. It's like, and there we have it. 2 trades, both winning, bad RR each. Total P&L was like, it was like, yeah, just plus 206. 2 trades, both pretty small. Would have been bigger if it was not NFP, but gotta stick to the rules because it's better. This week I'm up 328. And yeah, 2 break-even days, 2 winning days, very small winning days as well. This one I think I just reached over 130 profit, so I was just done at that point. And I don't know why I was only missing 1 micro right here. No, I guess I did 2. But can't wait till next week, get to up leverage back to normal. Hopefully I can get up to 400 tomorrow overall P&L, maybe 500 for a weekly P&L. And yeah. So is there anything else? Oh yeah, no. Right after this occurred, I did not care what happened the rest of the day, because I just, using this small little price leg and this price leg up, I had just done all that I need to do for the day. And whatever happened next, I didn't care, because I didn't need that. The portion that I needed for trading, the only portion that I needed was like that I was trading, not that I needed, but that I was trading, was these few minutes right here. That's all I needed. And that's why I like the sub 1 minute so much, because I don't need to be in here worrying about what price is doing all the time. That's all I need. And the price action's quick in there as well. So the results are quick. I don't need to, it doesn't mess around, I guess, at 9:30 on the 1 second, 5 second chart. Just goes to take profit or doesn't. I also like the 1 minute though, because like these entries kind of like the manipulation portion of the entry, very clean, which I like. Where am I? This manipulation portion, the institutional order flow entry drills and immediate rebalances are way more trustable on the 15 second, 30 second, and 1 minute than on the 5 second, 1 second. Those aren't that great. And they're so quick, it's just hard to have enough reaction time. But on these time frames, that's why I like the 1 minute as well. And nice trailed stops and it's a balanced time frame. But I like both. And overall on the day, we ended up sweeping the 15-minute trailed stop liquidity, and then we went down to here. We didn't fill in the whole opening bell gap, so the high was right here, very close. And I want to see. I never checked what this looked like on regular trading hours. Okay. Just opened up. Swept this. Oh, that makes sense actually. I should have anticipated that. We already, because listen, this is the previous 3-day low liquidity right here, and we went down on ETH, electronic trading hours, and swept it. Yet on regular trading hours we hadn't swept it yet, so of course the market is going to go down and sweep that again just to get all the orders out. And then this is why I don't like non-farm payroll days too much. See this price action right here, this price action, this, and like, oh, this is lunch hour, but it's just slow. It's high resistant. I guess this first portion wasn't high resistant, but once we got into the macro, we consolidated for a lot of it. No, we manipulated down to here, I guess, which was a pre-session low right here, I think. Let's see. Yeah, pre-session low sweep. Nice. Koa caught some trade right in here. Some long right here. I think he caught these 2 candles. But yeah, overall not bad. Gotta trade tomorrow. I'll see you guys later.